seats. I'm sure they wouldn't get us mixed up from the photographs.
I think so.
Ladies and gentlemen, a pleasure to be back here with you this morning at the Dubai FinTech Summit. And it's my pleasure to introduce you to Ian Johnston, who is the Chief Executive of Dubai Financial Services Authority. Before we get down to business, Ian, I would love you if you can take us back to basics and give us an overview of the role of the DFSA here in Dubai.
Sure. I think it's important for people to understand the context of not just Dubai, but the DIFC as a key element of Dubai. I think most of the people in the room would be aware of the DIFC. Probably very many people in the room have had lunch there or had dinner there, but a lot of people would work there as well. So the Dubai International Financial Centre is now 20 years old. We started in 2004, and the DFSA is the regulator of all financial services activity and responsible for AML for the DIFC. So we're the financial services regulator. But the DIFC, I will give a little bit of detail about the context because it leads some flavor to the other answers later. The DIFC is a bit of a unique construct, or certainly was when it was conceived, because it's 110 acres. It's a physical jurisdiction and a legal jurisdiction in the middle of Dubai. So 110 acres physical jurisdiction, and firms who want to do business from the DIFC have to locate inside and have their hearts and minds there, as we call it. So they have to have their resources there. It's not a jurisdiction that you can brass plate into. And then they run their financial services business from there, but it's also a legal jurisdiction. So the laws of the UAE, the laws of Dubai are disapplied from the DIFC. And the DIFC has its own law. We're a common law jurisdiction. We've written all the laws for the DIFC, our own contract law, employment law, insolvency law, all the regulatory laws, of course. And when you run out of the laws that we've written, then it's the law of England and Wales that applies in the DIFC. So as well as being a physical jurisdiction that most people would be aware of, not everyone's aware that it's also a legal jurisdiction. And the reason for that, it was a terrific conception. It was a great idea, because what it means is that the world's financial institutions can come in knowing that there's a body of law that they're used to dealing with in other jurisdictions. Because there's our own body of law, we also have our own court. Being a common law jurisdiction, we have our own common law judges, and they tend to come from the UK, Australia, Singapore, etc., and local judges who've been trained in common law. So firms come in knowing that they can establish in a place that's got a legal framework that they're familiar with, that they're comfortable with from other jurisdictions, and then its own regulator. So we were established from scratch as a brand new regulator back in 2004 to apply regulation to global standards. Those are not just words that we write up in the wall, because there are such things as international standards for regulation. Come on to that a little bit later, specifically in relation to innovation. But there are global standards, and right from day one, the mantra was that the DIFC should be a place that applies global standard regulation for international business that comes in and operates from the DIFC. The typical model for firms coming into the DIFC is it will be their regional headquarters. They would base themselves there, and they might run the Middle East from the DIFC, or the Middle East and North Africa, or the Middle East and South Asia, depending on their business model. And we've now licensed more than about 800 financial services businesses. There are several thousand companies doing business in there, but of the ones that conduct financial services, last year was our busiest year ever. More than 100 brand new firms licensed, or new firms licensed in the DIFC. The year before that was the busiest year ever, and so the place is continuing to grow. So that's what the DIFC is. People are doing banking, securities, insurance, and increasingly operating in the tech space as well. By far the biggest financial center, international financial center in the region, and very much aligned with the D33 strategy of Dubai as a whole, in terms of both the innovative part, but also bringing deep and serious financial business into Dubai.
You mentioned some very impressive numbers there. Dubai's regulatory environment has fueled significant growth in the fintech sector. Can you tell us about that and some of the key highlights that you have been involved in?
Yeah, so there is a transformation taking place. As I said, when we were established 20 years ago, it was the world's big traditional financial institutions who were coming in. So all the big global banks are there. there are 29 globally systemically important banks in the world. 27 of them are doing business from the DIFC. The big reinsurers are all there. Most of the top 10 international fund managers are there. So it was a traditional finance base when we got going. But much more recently, we've seen significant growth in the innovative and tech space. So one way to think of it as a timeline, in 2017, we launched our innovation testing license. Some other regulators refer to that as a regulatory sandbox. So that's where financial businesses can come in who are startups, who have a novel idea, something that's not in the market at the time that it was brought in, and they have the opportunity to test that in a more contained environment. So rather than going fully to market, make sure that service can work, make sure it's ethical, make sure they've got the governance and all the things right, but they can test out new concepts in a limited space, and then if and when able, they can go on to a full license. So that was in 2017. We also launched our crowdfunding rules, and it's interesting that the time that we launched those, that was thought of as innovative, whereas now when you think of crowdfunding, you think, oh, that's yesterday. There's all new things that are happening now. 2001, we brought in our investment token regime, so we recognize digital assets and tokenization, and in 2022, our crypto token regime. So you can see that timeline, that things are getting more and more into the tech and innovative finance area. In terms of what we're seeing strong interest, but it's shifting. In the early days that we were speaking to firms, they were almost not understanding what regulation was, and frankly, many of them not understanding why they needed to be regulated. Now, I think there's been a shift in that. There have been, of course, some fairly large things that have happened in the crypto market over the past few years that have influenced that. But there's also a growing understanding that, well, if we're going to be able to go to market, if we're going to be credible, then having some sort of regulatory stamp and regulatory framework around us is going to be important. So we're seeing more people coming to us, some are from traditional areas of finance who are going into the tech area and offering digital custody, being able to invest into crypto funds. So we're seeing existing financial institutions broadening the scope of their license, but we're also seeing new startups coming to us as well. So if you look at that timeline, getting ever more innovative as we go, and our approach is to say, well, we will apply balanced and proportionate regulation that gives people confidence, but at the same time, we want to make sure we don't stifle that innovation.
I was going to bring me on to tokenization, actually. And like you mentioned, we're having somewhat of a renaissance at the moment. 2020 was strong, got overshadowed by the crypto. With big banks taking on these token concepts, why is this? What are the challenges? And from a regulatory standpoint, what are, if any, are there barriers?
Yeah. So there is a bit of a renaissance. Tokenization has been stop-start. As you rightly point out, we brought our regime in place in 2021. But we took the view that if these things are going to be happening in and around our financial center, then we wanted them to be properly regulated. And that, I think, has been the right call, because that's the way that the world is now going. So with tokenization specifically, if you think of the building blocks with DLT, you can digitize an asset, you can put it into a token. That then has benefits. That can be for any type of asset, of course, not just financial assets. You can tokenize property interests, you can tokenize interest in gold, or in securities. And then that has the advantages of efficiency, effectiveness. You're also democratizing the market as one of the key things that people will talk about, because you're allowing fractional ownership. Fractional ownership in various forms has been around for a while, but once you start digitizing it, you can get ever more fractions of ownership. So the story seems good. There have been some risks, though, and of course the biggest one is the technology itself. There's a huge tech risk in that, and there have been some fails there. So one of the world's biggest stock exchanges a number of years ago tried to go to DLT in terms of trading and settlement, then decided to go away from it. Because they didn't find that it worked for them. But as you say, there is a bit of a renaissance now, and we encourage that because we've got the legal regulatory framework in place for tokenization, so we would encourage people to keep exploring it. Today, in fact, we've got a roundtable on tokenization, and I'd like to hear. So part of our job in helping people understand our framework and how the market works, we've got a round table here on tokenization later today. I think one of the reasons why it hasn't been as successful in the finance area as it could have been, if you think of some of the complexities around securities. So securities have some fairly complex rights, as in voting rights, payment of dividends. Those things become a little bit more difficult when you start fractionalizing them and tokenizing them. And then there's also been somewhat of a lack of institutional custody available, although I think that's changing. So globally, it's starting to develop more. We've got a framework in place for it, and I think it will have a renaissance.
You touched upon technology and the transformation of technology, how it is impacting the industry, and in particular the use of AI within the market. I guess it's probably still too early to talk about the regulation of AI, but what is the DFSA's approach in this regard?
So I can't go anywhere these days without someone asking about AI. You get asked about AI, you get asked about tech generally, you get asked about ESG. The days are gone where someone will ask me a traditional question about banking or insurance. AI is all the go at the moment. The first thing I would say is that we're not going to jump in and do a knee-jerk regulatory response to AI. AI is real, still emerging, we're all still coming to grips with it as to what its potential is, but also what the ultimate risks are. But we're not going to jump in it with a knee-jerk approach and regulate it. What we would rather do is understand how it's being used and understand how the risks that we see with AI are going to be managed by the firms that we regulate. So we do require them, if they're going to be using some AI technology, we require them to satisfy us as to how they're managing the risks. So if we think of the benefits, again, there's obviously efficiency and effectiveness benefits there. And the risks are well known. They're probably sometimes exaggerated among the main population, I think. Perhaps a little bit, but the risk, there's clearly data and privacy risks to do with AI. There are also risks around bias, be it inherent bias or determined bias, when you actually instruct something to discriminate between clients. It's a whole interesting field there in lots of areas of financial services, including insurance and others. So those risks are there. So we are trying to make sure that we get a feel for those, understand them. We are engaging with our firms and encourage them to tell us how they're dealing with those risks and help to educate us and us them. Again, we've got a roundtable on AI around today's conference where DFSA people will talk to firms about, and anyone who's interested about that. But in the meantime, what we've done is, along with the other regulators in the UAE, with the central bank and with the Securities and Commodities Authority, and others, we've issued some guidelines as to what we would expect firms to be taking account of. And as I say, that's largely around how are they dealing with the ethics of this? How are they dealing with the bias element? Are they putting in a determined bias in some products? How are they dealing with governance, management, accountability for the use of AI in their firm? And when I say accountability, if something goes wrong, what's happening to the people that may have caused it to go wrong? So we're getting a feel for that and issuing guidance at the moment. We will probably end up with some form of regulation, but the way I'm tending to think of it is that it's a risk like other risks in a business, operational risk or investment risk, counterparty risk, largely a tech risk. So I'd rather than bring out a specific bit of regulation on AI, I would rather embed it into the overall risk management framework and have firms understand that this is part of their job in managing that risk.
Let's turn our attention now to cross-border cooperation. How important is that for FinTech, and how do we ensure the risks and the challenges are managed in the correct way?
Well, if you think of finance generally, it's been cross-border for a long time, and probably in FinTech, it's cross-border on steroids, I think. I'd say something, though, that some people might find controversial, but I think is right, and that I believe. I think the days are gone where even in the tech space, firms, or people rather, people say to us, no, you don't understand. We don't have a corporate structure. We don't have a domicile anywhere. I mean, there were people who would argue that for a period of time. They tend not to be well-regulated in well-regulated jurisdictions, and I think those days are going. I think people realize that that's the wrong approach. increasingly we're finding that people that come and speak to us understand that there needs to be some regulation around this. And then the cross-border element is probably a complicating factor. As I say, it's been around in traditional finance forever, that firms and clients will be cross-border, and now increasingly it's going to happen in this space. So regulators are used to talking to each other internationally. We have a framework in place for that. We have those of us who are members of the global standard-setting bodies for regulation, and that's almost all regulators around the world, sign up to a memorandum of understanding, a multilateral memorandum of understanding, whereby we agree that we will share information with each other, and that's what we do.
You've just been appointed to the FinTech Task Force. Congratulations. Now, the UAE is a global FinTech hub, but your outlook is very global on international standards, and you're actively working in alongside standard setters like IOSCO. You tell us a little bit more about that and the work that you're doing there.
Yeah, so a minute of background on it before we get into the substance. Most people in the traditional financial world understand this, but not everyone, and especially those coming into the tech space are not quite as clear on this. So it might surprise some people to know, but there are global standard-setting bodies, as I mentioned, for regulation. So banks who regulate, banks in this country are subject to regulation by the central bank or by us if they're in the DFSA, and we apply, and the central bank applies, regulation that at a high level is determined by the Basel Committee, which is the global standard-setting body for banking regulation and supervision. In the securities area and funds management, the global standard-setting body is IOSCO, the International Organization of Securities Commissions. I'm fortunate to sit on the board of IOSCO, and then within IOSCO there's a FinTech task force, and we sit on that as well. My philosophy has always been, if you're going to be influenced and subject to global standards, then you want to have a say in influencing the standards themselves. So we sit on the board of IOSCO, and yes, I'm part of that IOSCO's FinTech task force. So its job is to determine high-level principles for regulation of securities, and that includes funds, and would include crypto funds, etc., and trading and exchanges, and then country by country, you apply those global standards in your own regulation. So that's critically important, because at the moment we've been flying blind with digital assets, and especially with crypto. If we were in banking, those global standards are there. Securities, global standards are there. Insurance, the same. But that has not been the same for digital assets or crypto. That's changing. So IOSCO is now bringing out, it now has recommendations that we helped to shape. And those recommendations will become global standards for regulation in digital markets. So globally sanctioned regulation to digital markets is coming. We're making sure that we're part of that. And the framework we have in place at the moment for crypto and for digital assets generally already meets the recommendations that IOSCO has come up with. So we're in a good place with that.
If you could go back to the beginning of your career and give your younger self one piece of advice.
Can't remember. Sorry.
Try harder. If you could go back, what bit of advice would you give yourself?
Some of my DFSA colleagues have heard me speak about this before. I've been fortunate to have had two great mentors. Neither of them knew that they were mentoring me, though. So what that was about was learning from other people, listening to other people. Sometimes you walk into a place and you're with someone who seems to think they're the smartest person in the room. I know that I'm never the smartest person in the room, and I know that there's always a lot that I can learn. So absorbing what you can from other people, I think it helps you making the same mistakes over and over again.
Your Excellencies, ladies and gentlemen, please put your hands together. Mr. Ian Johnston.